Good afternoon, and welcome to Farm Focus for Monday, January 13th. Grain prices were mixed today as the USDA did not provide any major surprises on Friday, and the trade is now waiting for fresh news again. March corn futures finished 4 cents higher today at $3.90 per bushel. New crop December corn up 2 cents at $4.05. March soybeans were 4 cents lower on the day, finishing at $9.42. New crop November beans down a nickel at $9.70. Kansas City March wheat was 2 cents lower on the day, finishing at $4.93. Minneapolis March wheat down 3 cents at $5.55. Outside markets were mixed, providing mostly a light negative influence. Crude oil is currently $1.03 per barrel lower at $58.01. Ethanol up 2 cents per gallon at $1.36. Gold down $9 an ounce at $1,551. The U.S. dollar index down 1 point at 97.07, and the stock market currently 43 points higher, with the Dow Jones trading at 28,867. Livestock markets were lower today, with February live cattle down 88 cents at 126.55. April feeder cattle down $1.25 at 148.80, and February hogs down $1.35 at 65.90. Grain prices did finish the day mixed as the trade now waits again for fresh news. The grain markets have been range-bound for the last few weeks, waiting for fresh news to drive prices in one direction or the other. USDA's January crop report that was issued last week on Friday failed to provide that fresh news. U.S. ending stocks changed very little in Friday's report, and therefore the long-term outlook for grain prices didn't change much either. USDA lowered corn stocks minimally, down 18 million bushels to 1.892 billion bushels. That's down from 1.910 last month. USDA lowered wheat stocks by 9 million bushels to 965 million. That compares to 974 last month. And USDA left soybean stocks unchanged at 475 million bushels. None of these changes were large. In fact, ending stocks remained very close to where they were the last month. The January crop report is considered the final crop report for corn and soybean production, but USDA said it will resurvey farmers in North Dakota, South Dakota, Minnesota, Wisconsin, and Michigan in the spring once they complete any harvesting of previously unharvested acres. USDA said that farmers who still had crops in the field will be resurveyed for yield and acres. This gave the bulls one final chance for maybe an adjustment, but it won't come till later in the spring. Friday, we reviewed the supply and demand balance sheets. Now we're going to take a look at that supply and demand, compare it to previous years, and then look ahead to the next year. In the next 3 slides, Friday's crop report was shown in the blue column for the 2019-2020 crop year. Corn ending stocks at 1.892 were little changed. It leaves stocks below where we've been the previous 3 years, but above where we were at back in 2014-15 and 16-17. Stocks at 1.892 are adequate to fulfill all demand categories, but they are down slightly from the last few years. As we look ahead to the possible supply and demand scenario for next year, which includes the crop that will be planted this spring, we're anticipating higher acres, about 7 million additional acres. Those are acres coming back from the prevented plant acres last year, and we're expecting yield to get back to a trend line yield at 178 versus this year's weather-reduced 168. We are anticipating a substantial increase in demand. Larger supplies and likely cheaper prices will likely result in better demand, but the bottom line is that new crop ending stocks could come in a lot closer to 2.9 bushels versus something close to 1.9 this month, and that is not a positive outlook for new crop corn prices. Turning to the supply and demand for soybeans. Our soybean stocks this year projected at 475 million bushels, about half of what it was last year. And as we look ahead to the new crop position, which again includes the crop that will be planted this spring, we're looking for a 6 million acre increase. Again, that increase in acres due to less prevented plants this coming year. Yields returning to trend line at 49 bushels per acre. Holding demand about steady due to large South American crops competing hard for export business, and that leaves ending stocks for soybeans at 470 million bushels, very close, almost unchanged from the outlook for this year. Turning to the wheat supply and demand outlook. First of all, this year, January, ending stocks coming in at 965 million bushels, down for the third year in a row, and the first time we're below 1 billion bushels in the last 4 years. But 965 is still an adequate amount of wheat to supply all demand categories. As we look ahead to next year, we're expecting that acres could be about unchanged. Winter wheat is down, but spring wheat might be up if we get favorable spring weather. Yield last year was very good, 51.7 on awfully good weather in the plain states. We expect yield at a trend line of 49 bushels per acre. Demand about unchanged, but the extremely low acres will allow wheat stocks to shrink again down to 834. So the overall outlook for wheat from a supply and demand perspective is somewhat positive. Unfortunately, it could be surplus supplies of corn and cheap prices of corn that could hold the wheat market back. So what will drive price direction now that the January crop report has come and gone with very little change to the old crop or current crop 2019-2020 ending stocks outlook? The Phase 1 trade deal with China is expected to be signed Wednesday. That could be a factor for our markets. Chinese Vice Premier Liu He and a trade delegation from China did arrive in Washington, D.C. yesterday, and it's expected that they will sign the trade deal with President Trump on Wednesday. U.S. Treasury Secretary Steven Mnuchin, who's also a key negotiator for the U.S., says that the translation process, along with the legal and technical review, went as planned with no major surprises, and there does not appear to be any reason why the signing wouldn't go ahead and take place as planned this week on Wednesday. The media is stating that the 86-page agreement will be released immediately after the signing. Unfortunately, we do not expect any specific commodity lists or volumes to be announced, and no specific time frames on when China will start purchasing either. With that in mind, once the Chinese trade deal is signed, the trade will be back to waiting and watching to see if China does in fact step in for U.S. agricultural purchases. The other item that could drive prices is South American weather. Unfortunately, the forecast remains mostly favorable for the next 2 weeks for both Brazil and Argentina. It may not be ideal, but the forecast looks good enough that crop production estimates should be steady to higher, not steady to lower. We did get one piece of fundamental news today. It was weekly export inspections. Corn inspections, disappointing, just 18 million bushels. We were hoping that after the Christmas and New Year holidays that we would see exports bouncing back to 25 or 30 million. That did not happen. A disappointing number and less than half the level needed to reach USDA's export forecast, even though USDA lowered its export forecast by 75 million bushels, we still fell less than half of that total. Very disappointing corn inspections today. Soybean export inspections a little bit better, 41.75 million bushels, up from last week and well above the level needed to reach USDA's current export forecast. Bean export inspections pretty good in today's report. Wheat inspections also bouncing back up to 17.4 million bushels after a couple of slow weeks due to the Christmas and New Year holiday, but still a little bit short of what's needed to reach USDA's export forecast. We need to see about 21 to 22 million bushels on a weekly basis if we're going to reach USDA's export estimate for wheat. Bottom line is that corn export inspections today, very disappointing, beans pretty good, and wheat about as expected. Taking a look at today's March corn chart, corn prices had a reversal day on Friday, traded lower when the report was issued, but rebounded to close higher. Saw some follow through today. That makes the chart look pretty good in the short term, and it's been enough to turn the technicals up as well. We are at overhead resistance from a pennant formation, at least the upper end of that pennant formation. If we can break through that, the previous highs at 392 would be the next objective in the nearby March corn chart. Turning to our March soybean chart, soybean prices have been bouncing back and forth. Most of the last few weeks have been between 340 and 350 on the March chart. Today we closed at 342 and remain within that fairly narrow, choppy range. The good news is that we remain above the 40-day moving average, and prices remain above chart support at 933. Unfortunately, beans have not been able to challenge the recent highs at 961, and the technical indicators are still pointed downward. This leaves chart support at 933, overhead resistance at 961. That's a range that could remain intact for the next couple of weeks. Turning to our Kansas City March wheat chart, today was an inside day. We didn't take out Friday's high, didn't take out Friday's low. We remain very close to the upper end of the recent range, with prices about $1 higher than they were around the 1st of September. The bounce over the last 3 or 4 trading sessions has the technical indicators pointed upward, with overhead resistance at 498, about 6 cents above today's close. Chart support down at 468, about 25 cents below today's close. This is Dan Cowger for Heartland Farm Partners. Thanks for joining us, and have a good afternoon.